Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got red on the screen with stocks lower as investors pour through the latest developments in the Middle East with the Israel-Iran conflict raging on for a fifth day. The Dow Jones Industrial Average lost 300 points or 0.7% down to close at 42,216. We've got the S&P 500 dropping 0.8% to 5,983, while the Nasdaq Composite lost 0.9%. And helping us to navigate what is playing out in the markets today is Damian McIntyre. He is the head of multi-asset solutions for Federated Hermes. Damian, good morning. Thanks for joining us on the show. How are you doing today?
Ryan, nice to see you again.
Let's dive into what is playing out in the markets right now, which is all about the conflict between Israel and Iran. So geopolitics really shaking things up back and forth. Where is it right now when it comes to how concerned investors are with what's playing out? We did get a bit of a bounce yesterday, but it's now risk off again.
Yeah, so what we're monitoring right now is the Israel and Iran conflict. More importantly, the heightened tension. It seemed today we took a step backwards in terms of progress towards a ceasefire. Equity markets did not react well with the S&P 500 selling off, and oil markets too. Oil gains are now up over 10% since the initial attack on Thursday. So we're monitoring some of the negotiation language that is going back and forth between President Trump, especially his tweets. He loves to be on social media, and seeing how that might play out as the week progresses.
Yeah, so he's got a lot on his plate. In fact, he's left the G7 summit just to go back to the U.S., presumably to address some of these issues. Where should investors be looking at right now when you look at how it's been rattling markets? What's your approach right now towards the U.S. equity side of things?
On the U.S. equity side of things, we like to take a little bit of a further look at the markets, a longer-term view on things. While we do get geopolitical headlines from time to time, we're looking at a market where the consumer is fairly strong. GDP, while it was negative in the first quarter, that was largely due to a net export component in the math. We have a jobs market that continues to have slowing yet stable jobs added to the United States economy, and inflation continues to come down. We had a soft print last week, and that should set us up fairly well into the second half of the year this year.
Yeah, there's also a bill going through Congress. This could mean more tax cuts. How much of a boost could that be for markets, and how likely is it going to go through?
We think that the bill will ultimately pass the Senate, hopefully by the end of the summer this year. It was a very narrow passage in the House of Representatives. Just one vote passed it through. So while we do expect some senators to make some noise and play to their base, we think they'll ultimately come to the table and reach an agreement to pass the bill. This should be a good boost to the U.S. economy. While the individual tax rates are simply being extended, so individuals might not necessarily see an impact to their wallet, there's a lot of business-friendly ingredients in that tax bill that should help companies and their earnings into the future.
Yeah, so that's a good part of the equation. The other part is the tariffs, where you might see inflation, some pressure coming through because things get more expensive. So what's the potential impact from those tariffs on the economy, on earnings, and of course what the Fed's going to do?
We ultimately see the impact of tariffs coming to about 10% per country across the world. We think that's what the Trump administration is negotiating towards. Now, with $4 trillion worth of goods imported every year to the United States, that would amount to about $400 billion worth of tariffs, which does sound like a lot, but the GDP of the United States is nearly $30 trillion. So that's only about 1.2% or so. So it could be a little bit inflationary, but so far this year, before the Israel-Iran conflict, we had oil prices coming down. We've had shelter prices down. So ultimately, we think that inflation could kind of trade through the year at like a flat level.
Okay. Where are you liking in terms of sectors in the markets? We have been seeing, like pointed out, energy prices going up. Is that a space you're looking at more closely?
Certainly. We're watching the large cap value space and the small cap space We think both of those could be set up fairly well if we get a reacceleration of the U.S. economy in the second half of the year, particularly the cyclical sectors within large cap value. So your industrials, your materials, your energy, those could be set up very well to do well if there is a reshoring initiative and some of the provisions of the tax bill get passed through. And then on small caps, we're looking at FOMC meeting here in about 20 hours, and we think that ultimately you're headed towards lower interest rates here in the United States. That coupled with positive GDP growth and an increase in economy could be a good setup for small caps as well.
Okay, so there is a bit about the consumer at play here as well. Folks getting more cautious. We've seen this in the commentary from some of the likes of Walmart, saying people are holding back on spending to some degree. What's it going to mean when it comes to holiday travels and vacations? Are you expecting any headwinds on that front, especially for airlines?
We expect headwinds in the short term for the consumer. There is a lot of scary news articles and social media campaigns about the impact of tariffs on inflation for consumers. We saw a large front-running of purchases in March, particularly in the auto space. But ultimately, consumers in the United States love to spend money, particularly if they stay employed. And we think that the jobs market's going to stay really well this year. So ultimately, we think they'll more or less get bored with tariffs, and they'll start spending money here in a couple of months as they are looking forward to a good holiday season come Christmas time.
Okay, and there is also some news around Boeing. So that, of course, involves the tragic Air India incident where over 242 people being carried to London. We saw that plane crash killing all but one survivor. How much of an impact is that going to have on the U.S. markets, considering how it's a big component of the Dow?
It was a, unfortunate event, and our heart goes out to anybody and their family who was impacted by that. And the timing could not be worse for the airline industry as well. There were a lot of headlines earlier in the year, this year in the United States about airplane incidents. There has also been issues in the past with the safety of airlines and different air manufacturers. So they were really working in the industry to rebuild that trust for the consumer, to get them back on planes and traveling more. And so this is an unfortunate timing for the industry because it will give people a little bit more pause as they're booking their summer travel to say, maybe we can drive out to the beach instead of flying.
Yeah. So lots of moving parts to look out for, but there is some optimism as we perhaps push into the year end with some supporting catalysts for the markets. And helping us out this morning has been Damian McIntyre. He's the head of multi-asset solutions for Federated Hermes. Damian, thank you so much for your time today and your insights. Great chatting with you.
It was great being here with you. Thank you very much.
All right, we'll catch up with you again soon, Damian. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.